Stocks went on a roller coaster ride on Thursday and Friday. Of course, the biggest moves were reserved for the NASDAQ. And of course, within the NASDAQ, it was the most overpriced and highly speculative stocks that went on the wildest ride. And it got started on Wednesday night. In fact, I spoke about it on the podcast I recorded on Wednesday evening when Meta, formerly known as Facebook, came out with disappointing earnings, and Meta was down about 20% in after hours trading, and it dragged the entire NASDAQ down about 2% at that time. Well, it was even worse when they rang the opening bell on Thursday. Meta shares ended up down 26.6% on the day. In fact, they sold off an additional 1/3% on Friday, although well off the lows. At one point, Meta was down about 3% on Friday, bringing the entire decline from its peak to 40%, which is a pretty big move, solidly in bear market territory. But when you think about the fact that Meta is one of the most widely held stocks among both individuals and institutions, you get an idea of how much damage is being done to the typical stock portfolio. In addition to Meta falling more on Thursday than the Wednesday evening decline, the entire NASDAQ also went down. It fell about 4%, which is a huge move for that index in a single day. And again, the riskier end of the spectrum getting beaten up even more. Look at the Cathie Wood ARK Innovation ETF. That was down 5.6%. Of course, many of the stocks down even more than that. Some of the biggest movers were stocks that were coming out with earnings after the bell on Thursday because the markets were bracing for more misses. So Amazon, Snap, and Pinterest in particular were getting hit pretty hard. Amazon was down 7.8%, Pinterest was down 10.3%, and Snapchat was down 23.6% because investors were worried that if they also reported bad earnings like Facebook, that those stocks would get clobbered. Well, everybody was set up for misses, and what the market did was surprised everybody because all three of those stocks ended up beating expectations, and that resulted in a sharp reversal in those names, which also helped to power the entire NASDAQ up, which rose about 1.4% on Friday. So not nearly recouping the 4% Thursday loss, but those individual stocks did. In fact, Amazon was up 13.5% on the day, Pinterest up 11%, and Snap rose by a staggering 59%. And I think what helped to power those gains was the fact that people may have gotten short in anticipation of a Facebook-style blow-up. And when that didn't happen, they had to rush to cover. And so that likely exaggerated the size of these moves. Again, I think these stocks are all headed lower. I don't think the earnings matter as much right now as valuation. All of these stocks are overvalued, and I think they're going much lower. Of course, there were some other stocks that did move lower on Friday on bad earnings. Two in particular that I want to highlight are Clorox and Ford. Clorox was down 14.5%. Big decline, new 52-week low. That stock is now down about 30% from its 52-week high. The reason for the decline was an earnings miss, and the reason for the miss was inflation. Inflation was driving up the cost of their products. They hadn't fully passed on those higher costs to their customers, which was certainly the case for a lot of companies last year that were lulled into a false sense of security because they believed the Fed that inflation was transitory, so they didn't raise prices, and now they're paying the price in weaker earnings and falling stock prices. But of course, what is Clorox going to be doing? They're going to be raising prices. They didn't really discuss that, but it's certainly going to happen. They have to defend their margins. They need to start raising prices. And that's what's going to happen. Now, as far as the stock is concerned, even though it's dropped considerably, looking at Clorox, I think the valuation is still too high on the stock. It's trading at about 26 times earnings, which I think is rich for that type of company if you compare it to its peers. Certainly if you compare it to the companies that I own that operate in that space, the stock is expensive. I think if it fell to below 20 times earnings, the stock might look interesting. That would be about $100 a share or less. Right now it's $141. If the stock does go down to $100 a share, it would represent about a 50% decline from its peak. And by the way, Clorox was another one of those COVID winners. One of the reasons it rose so much in 2020 was because everybody was cleaning stuff and sterilizing and bleaching things because they were afraid of getting COVID. And so that drove some extra sales of Clorox, which helped the stock get way ahead of itself as a lot of people just bought into it the way they bought into so many stocks that were temporarily benefiting from COVID. Investors were acting as if those temporary benefits were permanent, and of course they were not. The other stock that got beaten up on Friday on weak earnings was Ford. Shares of Ford were down 9.7% on the day. And that stock, too, is now down about 30% from its peak. But I don't really think the problem with Ford is a valuation problem. I think it really reflects underlying weakness in the U.S. economy. I think fewer and fewer Americans are going to be able to afford to buy new cars. I mean, fewer and fewer Americans can afford to buy used cars. So I think you're going to see a lot of problems both for Ford and GM domestically as U.S. customers are priced out of the new car market. Plus, a lot of people already bought new cars. They took advantage of artificially low interest rates, cheap financing to buy cars. And a lot of these buyers took out long-term loans. People are buying cars and they're using 5 or 6 year loans to do it. And so it's taking people a long time to repay their car loans, which means it's going to take a long time before they can afford to replace their existing car with a new car. And all of that bodes ill for the profits of domestic car companies. But the biggest move was not in the stock market, but in the cryptocurrency market. We saw a huge rise on Friday in Bitcoin. In fact, as I am speaking, Bitcoin has recovered the 40,000 handle. In fact, it's above 41,000. 41,500 is about where Bitcoin is trading as I am recording this podcast on Saturday morning. If you look at shares of the Grayscale Bitcoin Trust that dropped 3.5% on Thursday, along with other risk assets, it exploded higher by 13.5% on Friday, to the joy of the Bitcoin hodlers who are now convinced that the low is in and now we're off to the moon again, which of course is exactly what the rally is designed to do. I think this is a sucker rally orchestrated to create a false sense of hope, to sucker in some more buyers so that other people can continue to unload these overvalued crypto tokens. And so I don't expect this 40,000 level to hold. In fact, this may be the last time that Bitcoin trades above 40,000. We'll see. But if I'm correct that the air is coming out of all these speculative bubbles, it certainly includes cryptocurrencies like Bitcoin, because that's the most speculative bubble of them all.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.